We put Anna under pressure because we went right up to the 7 o'clock. Cool. Now. That seems to be happening more and more often. Alrighty. Have we got? Okay. Okay. Cool. All right. Cool. Okay. So we will get started. Welcome everyone. No, I'm not ready. Okay. I had to change and can't remember. Okay, so we'd like to acknowledge this land that we meet on today as the traditional lands of the Kaurna people and that we respect their spiritual relationship with their country. We also acknowledge that the Kaurna people as the custodians of the Greater Adelaide region and that their cultural and heritage beliefs are still as important to the living Kaurna people today. Okay, we'll go to item 2, which is the attendance record. I think everyone is in attendance, no one's missing. Apologies, we don't have any apologies. No motions to grant a leave of absence and no leave of absence and no non-attendance. Okay, item 3 is the declarations of interest. Does anyone have any interest to declare? No? We're all good. Is that David? Okay. She's not live yet. Welcome to. So item 4 is the confirmation of minutes from the last meeting on the 2nd of July 2024. Do I have a mover to confirm those minutes? Mayor Redman, the second one, Peter. And section 5 is any business arising from the minutes. All right, so if we move on to the, first of all, we'll go straight to the decision reports because we have Juliana here from Galpins. Welcome. And do we have David and Dolce? They're going to wait until then? Okay, we'll leave them. We'll just leave them hanging. Oh, is it just Dolce? Okay.
Yeah, it's me. Yes, apology from David.
Okay. Thanks. All right, so we'll start off with the decisions reports because we've got Juliana here from Galpins, and then we'll move to your item after relax until we get up to the internal audit stuff. Okay, so item 6.1 was the general purpose financial statements for FY24. So we have an officer's recommendation that the Audit and Risk Committee recommends to Council that the financial statements for FY24 present fairly the state of the affairs of Council and that they be presented to Council for adoption at its 26th of November 2024 meeting. We've also noted the certification on the financial statements that signed by the Chief Executive and the Mayor. The auditor's certification and auditor's independence be received and noted. The certification of auditor independence be reviewed and signed by the Audit and Risk Committee presiding member and Chief Executive Officer, and the management representation letter be received and noted. So, Juliana, I don't know whether you want to just make a statement or any observations from the financial statements. We did meet in confidence with Juliana before this meeting. That's why we're running right up to 7 o'clock. And just noting that this is the end of the Galpins 5-year audit contract. And so I have thanked him and his team for all of their hard work and commitment to the Council. We were discussing sort of, 5 years ago, and that was before COVID was even a thing. So Well done, Juliana, because it wasn't a smooth ride. And you've supported the council really well through that time, so thank you.
No, it was a challenging journey, but yeah, good times now anyway. So perhaps I'll just go through the audit process until we finalize the audits and finalize the audit of the financial report. So we issuing two opinions. One is the controls opinion. So we came here in February and March to perform the test of design and effectiveness of internal controls. And that's what substantiates our controls opinion that we attach to our audit completion report, and then we intend to issue an unmodified controls opinion, which means a clear controls opinion. You know, those audit terms called unmodified, not everybody understands, but it's a clear opinion. And in early September, we came to do the final verification of the account balances and review the financial report, and we also put in issuing like a modified opinion on the financial report. So talking about the controls opinion a little bit, we need to tell you and your stakeholders whether you comply with Section 125 of the Local Government Act. We are required under local government regulations to use the better practice model to benchmark your financial internal controls framework. The better practice model contains nearly 400 controls, and that's why we adopt a risk-based approach to select a number of controls that we would expect to see in place for a council like Town of Gawler. And after adopting that risk-based approach, we identified 100 controls that we would expect to see in place for a council for your size, and then those 100 controls were within the key business cycles we identified. A list of those controls were attached to our interim management letter, which I think that provides more visibility and transparency over our work, so we know what controls were operating effectively and what controls were not operating effectively. When the controls opinion was created, we decided to change the way we report our findings, because typically external auditors can report on an exception basis. We do that as well, so there's a list of findings that in the interim management letter, but to try to give you like the big picture on how council is performing in terms of effectiveness of internal controls and compliance with Section 125. So if you look at the Section 3 of the audit completion report, we see in that table that council had 95 controls operating effectively out of 100, which indicates a high level of compliance with Section 125 and a high level of effectiveness of internal controls. And then we have a comparative over the 5-year contract. So council came from 86 controls operating effectively and increased to 97 controls operating effectively, which demonstrate a significant increase over the 5-year contract. More specifically, in the last years, there was like repeated finding on procurement on purchase orders, which I think like previous management was a bit more pragmatic in terms of getting purchase orders issued for every single purchase. And I think like in the last couple of years, I think it was great to see that actually, you know, the current financial management actually look about the issue a little bit out of the box and look at the issue and see, and look at the procurement policy and make analysis saying, does that reflect what we do and how we run business here? And then they did like a good review of the procurement policy and to just realize that it's not necessarily a purchase order for every single purchase. So there might be services that where the commitment of funds can be substantiated by a contract signed by the appropriate officer or an approval of a procurement of a purchase or a purchase order itself. So just that change in the procurement, I think that procurement policy that actually addressed the issue was more like, you know, to actually tailor your policy to how you're running the business and your reality. So I think that was positive to see that was, so council was able to address those repeated procurement issues from the past. So, and talking about the final audit. So when it came here in, early September, which was a bit earlier than in the past years. Was initially a bit skeptical about having that visit that early, and then some of the conditions we imposed was that we need a final draft financial report before our visit and get all the documents ready for us before the visit, which council did and met those conditions. So yeah, we had all the documents we needed, was available to us for every single account balance, for every note, and then the first draft of the financial report was at a good quality. And when you look at the last version of the financial report compared to the first version, there was just some minor amendments, and yeah, I think council did a good job in getting ready for the audit, which was earlier than in the past years. So the audit completion report has a section about the final management letter. So we issue an interim management letter where the most of the findings are. And in the final management letter, we just add some findings we find during the final audit, because during the interim audit is more focused on controls. One new thing is that I think when the Golar East Link Road was constructed, I think council was committed to contribute some amounts toward that construction, and then I think $500,000 out of that amount, council would receive a contribution from a developer, and then council to pay the department that $500,000, and I think that $500,000 is still outstanding from the developer since 21 or 22. At the time I was doing the work, I think council was sending like a demand letter to the developer requesting a final payment, and from my best of knowledge, and I don't know, perhaps Sharon can give an update on that. So, but from the time of my visit, I think there was like a negotiation, like a plan of payment being negotiated with the developer. So I think like what you recommend is like perhaps the early stages should talk about the impairment of the debt, because there's like a payment plan being negotiated. But looking ahead in the future, you know, if the developer default any payments in the future, maybe, you know, there might be a time where may need like a reassessment of the risk of collectability of that debt. And yeah, you probably need to be ready to answer those inquiries and questions, because certainly that's the first question the next auditor will ask is about that, you know, longer standing debt. So yeah, it's good to reassess the risks involved in that debt collection, in that debt. Yep. And that was the main thing, the main finding for the final audit. And after we finalized our interim audit and our final audits, yeah, we concluded that, as I said, we are to issue a clear controls opinion and a clear opinion on the financial report. And you know, we're happy for council to certify the financial report and then for us to issue the final auditor's report.
Okay, thank you. Has anyone got any questions or comments? Yep, Christine.
Just one of substance and a couple on typos. So I'll do the substance one first. Just on this amount that's owing from Springwood developers, I'm just wondering on the other side, when the council receives that money from Springwood, it then needs to be paid on to state government department. What's the trigger or risk that the state government starts chasing that before Springwood has paid it?
There's been lots of discussions in relation to that. So obviously it was a, so DIT, I think DIT have been chasing it, but they've actually been chasing it with the developer. So we're actually just sort of like the middleman as a, based on the nature of the funding agreements that were actually developed with regard to the Gawler East Link Road. Wendy might be able to add a bit more to this after, but there is a new developer on there. So we've actually been in discussions with them. So they have agreed to a payment plan where they will pay, I think, around about $200,000 by the end of November, and then the balance, because they've actually got some stages that they want to release, and we've actually said, well, you have to actually, I suppose, honour this agreement. So from a legal standing, as to sit there and say that we've got it in writing that they acknowledge that they understand that they're liable for the debt. I think that that's probably been a bit of an advance from previous discussions that we've actually had with the people who's been running the development up there. And yes, we've had we're just finalising the written agreement as to what the payment plan is at this point in time. So I think from our perspective that we're confident that they'll actually meet that, because the developers working with council, whereas in previous developers they probably haven't been as forthcoming in having discussions about it and all that sort of stuff as well. So I don't know if you want to add anything. Yep.
The little typo ones. On page 26, where we've got the little table showing the difference between the cash payment received and the annual allocation and the difference, there's just a little transposition error. The 23-24 number in the difference column shows 2,848,000 and it should be 2,484,000. And then the other one is on page 55, where it mentions, I think it's the officer's name, which is actually the ex-CEO's name there, so I assume you need to update that.
Well done, Christine. No, you. That's unforgivable. All right, good. Yeah, Councillor Shanks.
Yeah, thank you. I guess this is probably a question to both the auditor and the organisation. I mean, audits are very useful for any business. Some of the controls that have come through, I'm sort of assuming that they didn't come as any surprise, but they do help substantiate the reason why some processes might change, and are we looking forward to some of those process changes? Have been cross-educational, I guess, this whole journey. And if we use the East Road as an example, is there anything we can do with our policies or deeds to really underpin the ability to collect that debt? I mean, you've got $500,000 that we're the transactor of, so, you know, we're not that exposed, but just in general. We've had developer deeds sort of needing review and blow up in our faces in the past, so just a question there.
I think a learning from this situation is that when there's co-contributors to the state government, we shouldn't actually put ourselves in the middle of it, is the learning that I would sit there and say that, you know, if there is an agreement that the developer makes the contribution, the arrangement should have been directly with DIT and the developer from that perspective. And obviously I wasn't here when that deed funding agreement was actually established, so there may have been some logic in it at the time, but I suppose that would be our learning from it. I know that with respect to the infrastructure deeds that we actually have, Andrew, who's from planning, has actually gone through a lot of work in looking at those deeds and sitting there saying, okay, well, yes, they probably do need a review to make sure that they're relevant to the situation that we actually have ourselves in now, compared to probably coming up to 10 years ago when that Springwood development started. So I think that there is some learnings out, and what I can't sort of sit there and say, okay, well, what they are, but I think that there is some learnings of understanding and making sure that we have that understanding of what it means going forward.
Yes, and I agree. Just from auditor perspective, and without knowing this in detail, but generally speaking, we need to clearly define the parties, all parties involved, the roles and responsibilities of them. And like Sharon said, there's a deed. So in the deed, we expect the roles, responsibilities are clearly defined, and someone should also monitor and ensure like the deeds, the obligations within the deeds are fulfilled.
Yep. Thank you. Juliana, did you want to say something else?
And from a from a controls opinion perspective, and then I think that in terms of the controls over that collection, I think council has the appropriate controls over that collection. I think that case particularly is such a unique case that is not really related to an absence of internal control or in relation to that collection. It's more like the unique transaction in terms of signing the deeds. And yeah, as Sharon mentioned, that probably is more like related to, what you consider when you sign those deeds. And yeah, but in terms of internal controls over that collection, we're satisfied in terms of issuing our controls opinion. So yeah, I don't think it's related to any absence of internal controls over that collection.
And the other thing to note that from a state government perspective, the management of construction contracts is managed completely different to now than it was 5 years ago. So I would doubt that this situation would arise now because the whole process has been re-engineered. Are there any other questions? Peter, did you have any questions?
Thank you. Yes, it's not really a question, it's a comment about the audit report, basically. Just to compliment you on the component of the report that deals with the sort of the sustainability of the council. Which is this a new aspect to the reporting that you're doing nowadays? I've seen it elsewhere as well, but I really like that that section 6 that you put in there for about the sustainability. I think it's a useful addition.
Sorry, do you want to say?
I mean, we've done that before, but it's becoming more common now, especially in the last couple of years, because as you were talking about in the in-camera session that construction costs are going up to the roof, and then when councils do like an upgrade, or it doesn't need to have any extravaganza to have an impact on the long-term financial sustainability. Now, anything you do to upgrade construct an asset has a huge impact in the long-term financial plan. In general, I'm not talking about Golar, but in general. So we've been writing a few of those comments for a number of councils that Golar is not alone in terms of those ratios. There's a number of councils out there reaching like a really high level of net financial liabilities ratio because, construction costs going to the roof, and then rates increase not following the construction costs. And then if you upgrade a swimming pool or build like a new community center or do like a new Aboriginals art. So if I mention those projects, you probably know what councils I'm talking about. So, so then, it's a really common issue nowadays. And then given the economic scenario we live in nowadays, so we sort of like putting like a more focus on that rather than writing about what happened in the past, sort of like have like a future looking, how things are looking in the future in terms of long-term financial sustainability.
Are there any other questions or comments? Mayor Redmond? No? Everybody happy? So we're happy to, we've got the officer's recommendation up on the screen there. So do I have a mover for that recommendation? Peter? Seconder, Mayor Redmond, seconder. All in favour? Yeah.
Just happy to support the recommendation, and I think it has been good conversation and seeing where we're evolving to. I guess on the East Road as an example, and merely just an example, if we do have that long-term sustainability lens we're trying to look through, what actually ties into it is actually quite interesting, because developers developing in our area does have a net effect. Whether that be a positive or a negative is something for a different debate, but it does deliver on assets, and there are deeds, and when those deeds come online, sometimes aren't under the control of us, and sometimes the delivery of those things and then us having to finance our part of that delivery can actually be quite a handicapping position to be in. You know, we're seeing very good examples throughout the general purpose financial statements, and I'm still trying to get my head around how we can get given $4.5 million to deliver something, but it actually superficially handicaps on how we are to report by that operating deficit and how we communicate that. I think the longer term piece, communication piece, isn't your annual budgets, it's how it ties into your 10-year plan. So it is good to see the general financial statements, absolutely, and I'm still trying to get my head around the language, and I'm really appreciative with the way you've explained it, and staff, and Erin yourself as well. You know, these are starting to see that consistency tie in, but I think the real piece is that community plan and long-term financial plan, because once you start really underpinning that, the developers are then directed to tie into it. Without that, you're just 12 months. So yeah, look, happy to support it, and it is good to see that it has been a usable audit, not just a box tick and something to be intimidated by.
I think also when you get to the end of the 5-year contract and you've got that tracking of the controls and that, it's very valuable information. Excellent. So we had Peter moving, seconded by Mayor Redman. All in favour? Carried unanimously. All right, thank you. Thank you, Giuliano, for your 5 years. And if you want to stay for the next 500 pages, you can, or you can choose to leave. We can provide you highlights. All right, thank you. Okay. Now, Donju, can you hear us? Are you all good? I'm not sure whether she can hear. Can you type her a message, Anna? Or have you got a text?
She can't hear now.
Yeah, I'll do that now. So I just, while we're sorting out the audio issues, so I just wanted to move the motion that we move item 7.1, the internal audit update. We bring that forward in the agenda to consider that now while we've got Donju on the line. I do believe it's on page 300 and... what was it? 400, if we just go to 479. The internal audit update. Is it better? We're getting... 479. What's that? It's here.
She can't hear us.
Because we could hear it before. Can you hear us, Dongju? Oh, do you want me to just keep talking? Can she hear us now? Can you hear me now, Dongju?
Yeah.
Yes, there we go. Very good. Okay. All right. So we'll move to 7.1.
I'm sorry, who moved that motion?
Okay. So
I moved it. Can I have someone second that we move? No, or Christine did. Yep. I'm just like nominating people. Christine seconded it. So. Okay, so we've moved it. We're all good. Okay, so item 7.1 is the internal audit update. And so we've got the officer's recommendation that the Audit and Risk Committee notes the internal audit update report. So Nathan or Donju wanted to speak to this item?
Yes, I can do it.
Cool.
So basically, we did this sales, services and revenue process audit in June. We looked at the Perfect Mind system, and it is used in 2 centres, Aquatic Centre and Sport Community Centre. So during the audit, we found good practices, such as the 2 centres have current operations menus to provide guidance in various areas. And we did a sample testing of 14 daily till counts. All of them had evidence of preparation from the duty supervisor on shift. And also the fees for services has been set up correctly in the system. The attendance of all types of patrons in 2 centres is tracked and monitored. Also, we addressed a few areas which needs to be further improved. For example, like the reconciliation between the payment received and the sales recorded in the system. We suggested going forward a daily reconciliation is effective, should be in place. And also the reconciliation between the sales in Perfect Mind and the revenue recorded in the authority should also be regularly reconciled. During the process, we also addressed the Perfect Mind system user access should be reviewed, ensure the responsible officers have the right access to segregate the duties as well as enabling them to do what they supposed to do. During the process, we found the recreation and aquatic center team who managed the 2 centers. They could explain some of the gaps we found. However, the record keeping should be improved going forward. So overall, we found 2 medium findings and 3 low findings and 1 improvement opportunity. And we believe the improvement opportunity of integration between POST system and FPOST machine may have already been implemented. I take the report as read and happy to take questions.
Are there any questions? Councillor Shanks?
Yeah, thank you. I'm sort of just looking at page 509 of 600. Blatantly sort of standing out is the $189,000 of insurance claims across 29 motor vehicles, and the recommendation.
Oh, no. That's the second report.
7.1? No?
Yeah, but vendors didn't do that review.
Oh, sorry.
So just hold that one and we'll go back to it. Yeah. Sorry, Peter, did anyone have a question on the sales one? No? And I can see in the report that we've got the management response, and I'm assuming that that's all under control, and we're working out, what's efficient. Like, is there a comment on implementing the findings?
So through the chair, yes. So finding 1, we've already had the training authority for all the teams being completed. User access and set-upping of T-codes has also been completed for the daily receipting processes, which is fantastic. We're just finding there's been a slight delay around testing. Unfortunately, our authority system and Civica test and dev platform has been down for about a month or 2. And we've been fighting that from an IT perspective, so the only thing we've got is live, and we don't really want to do it in live while we're still training, so there's a bit of a lag on that, unfortunately. We have consolidated all of our work orders, and testing's occurred in the Perfect Mind test environment as well, and integrated FPOS, as mentioned by Dongju, has already been implemented at both of the sites, which is significantly improving our variances at the till, for example, which is fantastic. In relation to finding 2, the refund record keeping, so we've reviewed that whole process. We've actually implemented those authorisation chains from staff to supervisor levels. We've got a formal refund request process now, including documentation, and any refund over $50 needs to be authorised by delegated officers with the appropriate level of authority, not just general people. We've got a request refund reason within the Perfect Mind system now as well, so an actual reason has to be implemented rather than just refund, which is fantastic. Training in that process has been done by the staff at the sites and incorporated into our online induction process as well. Integrated FPOS is assisting here as well because there's less refunds as a result of that integration. And the operations manual's been updated at both sites outlining those processes and those delegation limits. With respect to finding 3, with system access not being fully effective, we've undertaken the review of that and completed and adjusted those access levels where required, so that's completed from our perspective. Finding 4, with the lack of sufficient guidance in the operations manual, we've updated all those procedures, especially relating to the integrated FPOS, the banking and refund processes, into the operations manuals, and the training on those updated procedures for all staff has occurred, including the induction of staff at the Aquatic Centre, which recently opened, which is great. And finding 5, the discrepancy between income in Perfect Mind and authority. Through our quarterly review process, we're looking at our Perfect Mind income and authority and working through a reconciliation process of that. We are aware of the issue, and it's always going to be an issue because some invoices are generated through finance direct into authority, other payments come into Perfect Mind. So there's always going to be a gap because we still do have 2 systems operating. But we're doing that improved reconciliation process with details and explanations of the discrepancies, and they're occurring on our weekly banking reconciliations now as well. So well progressed in responding to the findings. This has been a while in the making, as Dongju knows, so it's been good that we've actually progressing before the final report came out as well.
Yeah, that's really good to hear, thank you. Christine, did you have a question? No? All right, on that one? Yep.
Sorry about that, but yeah, no, with this particular one, and it didn't really surprise me too much per se in some operational, because you look at the business in itself, and you know, just by natural yearly turnover of staff and volunteer, you know, just the way of the business. So I guess when these new systems be implemented, assuming that the induction process is a bit like, you know, mainstreamed or updated to suit? Yeah.
Yeah, through the chair, that's 100% correct. So there's been a big transition. Obviously, the Aquatic Centre being a very seasonal facility, large induction process on that. And there's been a requirement in the first couple of weeks of opening that we've had senior staff there to monitor the training and development of the new staff. We're at a point now that we're quite confident that staff have got it, so to speak. It was a big system change for those guys, and anyone coming in new learning it from scratch. It does take a little bit of time and repetition, so we do have good staff backup training process in place though through that induction.
Cool. All right, so now it's easy to go to the next report, to the fleet report, and then we'll go to the scope of the next internal audit. So Nathan, did you want to talk to the fleet risk management report?
Yeah, I guess my question is...
Sorry, Nathan Hall, the other Nathan. It's 2 Nathans. Who has 2 Nathans?
Through the chair, so Gawler was lucky enough to be part of the pilot program that was rolled out from local government risk services on our fleet management systems and how we manage it. It can be a large portfolio that they insure, and they like to know that we're looking after our fleet, and we like to know we're looking after our fleet as well. So look, the process was very smooth. We were quite happy with how it progressed, and yeah, we do have the final report attached. Nothing jumped out at us that was, oh wow, we didn't know about any of this. And then I'm working with Paul Marsland to work on a treatment plan for the recommendations that were identified.
Okay, and we didn't pay for this review, they just came out and did this review. Oh, it's pretty comprehensive. Yeah, cool, awesome, we like for that. Councillor Shanks, would you like to take the mic?
I'm not sure. No, look, I guess, and it's not uncommon, we see some of the bigger guys in our industry as well outsource that fleet management. It is quite a handy asset when you have that overseer. You know, you have certain employees that look after our fleet different ways, and having that consistent check across the organisation does actually isolate the process a little bit from the managers above. So I just guess, so again, on that page 509, you know, we've got that $189,000 worth of insurance payouts due to 29 damaged fleet vehicles overall. A big one in 2022 being that 73,000, and now we've come back with the recommendation of retraining internally for driving training. I don't know what other options are available, but you know, those are the sorts of costs that it's really, really hard to forecast. And I don't know incident by incident, and I'm not about to start throwing out any accusations. It does say in the report that it was at driver fault though, so I am able to talk to that. You know, I guess it's that management of expectations, and it is handy to have these things in a report. It is handy to see what measures are involved, but you know, if we don't start seeing some of those changes, we're going to create a high level of frustration out there in our community. You know, in our organisation, we see these things, and you know, in lack of a better term, silly accidents, and we're not using our insurance to pay for it. Then we're going after the employee to turn around and say, you're going to pay for this, or if we're not going to do it, you're going to pay for the excess, because we note that that's a $5,000 fix. Again, over 5 years, $189,000, you can't say your premiums aren't untouched with that sort of thing, with where the insurance market is. Just an observation there. I know it took a bit of an embarrassment on Councillor Shank's side to get there, but just a point to just, I guess, flag that how we manage this and consistently is going to be scrutinised. It is what it is at this point in time, because those cars are funded by ratepayer money, and there is an expectation that those cars are looked after, and all I'm sure they are. It's just we do need to manage some of those expectations.
Yep. Thank you. Christine?
Just on a similar topic, I'm just wondering if staff are offered defensive driving training, which might help, because the two biggest types of claims, one was incidents around overtaking, and the other one was hitting stationary objects. Yeah, which, but I'm just thinking a defensive driving might help with when overtaking skills.
Wendy?
Yeah, I'm sorry, I just feel like I need to comment on the overtaking one, where that was not the staff member's fault at all. That was a third-party fault. And in all honesty, the staff member was lucky not to be seriously injured by someone else's very poor driving. So defensive driving may be a good idea. I'd say these three top claims, we're talking about major plant here. These aren't light fleet incidences. These are all involving major plant. So trucks and trailers and the rest of it, which is why they are individually large sums of money. Yeah.
Nathan?
Sorry, that total dollar cost is actually the payout of the insurance scheme. It wasn't what council was charged for the replacement of those vehicles. So council paid the excess. That $189,000 is what the local government asset mutual fund paid out to replace those vehicles. So we are minimising by having insurance that we're only paying the excess on those, but 100% we are working with the recommendations here to start doing verification of competencies for these major plant, the graders, the backhoes, the loaders, the excavators, so that we can ensure that these staff are maintaining their competency and that they are still current. So that's the major, I suppose, project work that we're working on over the next 12 months.
Christine? Sharon?
And just through,
Got you on the wrong name.
through the chair, just a point of clarification as well is, as a member of the Local Government Risk Services, the asset is actually a mutual fund, so essentially we're a self-insured fund, so it's not necessary, like it's not a commercial insurance company that I suppose a lot of the smaller organisations, so we contribute to pay a membership fee of that, and it is that mutual, it's a mutual liability, so it's not a normal commercial. So we do have those benefits of lower excess. I think the excess on vehicle claims is only around about, or asset claims is only around about $500 or $1,000. So there are actually quite minor. So that's the benefit of actually being a member of the Local Government Risk Services and that mutual fund as well. So yeah, and just to some of those stationary objects, it's a common thing across councils that everyone runs into a bollard because they just don't see it.
Yeah. Are there any other questions or comments? I think from my perspective, we've just got to keep this report in perspective that it's it's provided free of cost. In order to show us how adequate our insurance coverage is. It's a bit of a double-edged sword. So I think, Nathan, if you take the recommendations away, given the fact that, a fleet review wasn't on our radar because we don't consider it to be of high risk to the organisation. Also, the point of having insurance is to mitigate the risk. So, and show that I think we're getting really good value for money for insurance. So I think look at it from a holistic point of view. I think sort of the takeaways are probably need to have a look at the policies and procedures, when we have the chance, because it hasn't been reviewed for a while, and then have a look to see whether people need some training. They're probably the two key things. But I mean, it's a wonderfully comprehensive report, but we've just got to keep it in perspective as well. All right. If there's no more questions or comments on... Oh, hang on. No, sorry. We've got to go back to Donju, and we've got the scope for the next upcoming audit, if I can find a page reference after it's too many pages.
Yes, on page 524. So we have started this service level measurement efficiency framework review. We had 2 workshops with the broader management team. We discussed the structure of the framework, the key contents, and also the service prioritization tool. So we are drafting the framework and also finalizing the service priority tool. And once it's done, we will provide it to the executive team to seek further feedback and finalize it.
Yep. Sorry, Sharon.
Through the chair. So we've actually progressed this. We're probably at the stage of having the tool coming back to us, I think within the next week. So as an executive, we can actually, I suppose, test the tool. The intent of the tool is making sure that we actually understand, I suppose, where our services sit across the board on a value and cost basis, and ensuring that we actually spend a lot, because obviously when you take service reviews, you can spend a lot of time and effort and not for very little gain. So we want to make sure that when we do those reviews, we're actually focusing on, I suppose, those high value, high cost ones to try and bring down the cost to a low cost, looking at those low cost, low value to work out whether realistically if they're of low value to the community, and yes, they're a low cost, realistically can we move them into a high value quadrant, or are they things that we just probably shouldn't be doing? The same scenario if we actually have a high high cost, low value, and again, what we actually need to do to actually shift that into that quadrant of high value and lower cost, and making that assessment rather than sort of using the gut feel of, I think we should look at this. This area is costing us lots of money, so we spend a lot of time and effort. So that's the idea of the tool, just to make sure that we're actually addressing the right areas of the business that is actually going to provide that value. And then it's also scalable down to, I suppose, that next level once we actually get into, I suppose, individual departments, and then they can actually address, if they're looking at their areas, they can actually assess their functions to make sure that they're actually addressing those functions about which are the ones that are actually going to make, I suppose, provide that value. Because it's all about making sure that we're providing and maximising our value that we're actually doing to the community, and that's the whole intent of the tool. So, from my perspective, it's been a worthwhile exercise to date, and I think it's probably a tool that we could probably apply once we actually through a lot of different scenarios as well, when we actually evaluate that from the criteria that we use to determine that cost versus value scenario as well. So I'm looking forward to starting to play with it from our perspective.
A very, very timely review, because I mean when we've got budget constraints, you know, the only way we're going to sort of move the dial is to work out what we can continue to deliver, where we need to find efficiencies, and where there are efficiencies to be obtained to reduce costs. Any comments or questions on the scope? No? Okay, very good. And then the last part of 7.1 was the internal audit action plan. Nathan, did you have any comments from that? I'm taking it as read. Did anyone have? Christine?
Just a question, reading through this document, it would appear there's some resourcing issues, and so it's difficult to get a lot of these projects done. And so I was thinking, you know, is it possible just to concentrate on the high priority ones to at least knock those off? And then I was seeing on page 530, it talks about a legislative compliance policy and procedure, and in the blue writing, although I note this is only a medium priority, it talks about a policy governance framework is currently being developed for presentation to the November Audit and Risk Committee meeting, which I guess is this one. So just wondering what the plans are for presenting that, and I guess also in the context of it's a medium priority rather than a high priority.
Through the chair, so the intent was to actually have that policy framework presented to the audit committee this meeting. Essentially, just through it's pretty much 95% complete, but just from a timing perspective of getting it and having the opportunity for executive to actually look at it, we just didn't have that time, so it will definitely come to February's meeting, and I think that I suppose from a governance perspective, we probably felt that it is actually quite important. I think we were just talking about it today, is to sit there and say that the council has 179 policies, which seems a bit excessive, and I suppose it is that same scenario of looking at I suppose those efficiencies and effectiveness of those documents and that system as well. So yeah, so it will definitely come to February's meeting, and as I said, it's pretty much complete. It's just a question I just didn't have an opportunity to get my head around it and get it before executive, before it actually came to the committee. Believe me. Sorry. We'll work through them, how they progressively come back.
And I don't think it's a bad idea for the new CEO to look at it either. I think that's what the response, I was laughing, that's the response I would have given, that you were just waiting for the new CEO to come on board so that it could be reviewed in alignment with his future vision for the council. Yep. All right. Now, is that everything under 7.1? Have I covered it all, I think? Yep, we're happy with that. All right, so do I have a mover for the officer's recommendation? Councillor Shanks, yeah? You can, if you move it, you can make comments. You're on, oh.
Thank you. Thank you. And I think, again, not to confuse, no accusations at all put. We see some of these dents and dings, whether it be bigger plant and equipment, light fleet, whatever it is handy to understand the mutual liability scheme that we're in. Obviously, that doesn't do away with the risk that has been identified that we've sort of brought up in the room that was within the report, that we do need to understand. But again, this isn't any reason why we shouldn't be looking into these things, and no fear or favour here, because unless we are looking at these things, unless we are trying to strive for that quality improvement, I think we could start going backwards a little bit personally. So I am heartened to see the benefits of these schemes paying off, even though, there are some personal risks, not only property damage, and, we want the best for our staff and the community that they deal with each day. I'm happy to move this, and I look forward to seeing some of these. The service level management efficiency one is a big piece of work, and it is a continuation of a lot of conversation we are having through the budget cycles. So actually seeing that tool come into play is actually quite exciting for me. Tell me 6 years ago that I'd find that exciting, but anyway. Happy to move the officer's recommendation there.
All right, perfect. Have I got a seconder? Mayor Redmond second. All in favour? Carried unanimously. All right. Thank you, Dongju, for your time, and we'll let you go, so you don't have to do the next. What are we up to now? About 350 pages?
Yeah, thank you, committee.
Okay, we look forward to seeing you in the next meeting. Thank you. Okay. For item 6.2, which is the asset management plans. And so the officer's recommendation is that the Audit and Risk Committee recommends to Council that those three listed, four listed asset management plans be adopted, as well as the strategic asset management plan. Due to the volume of pages, the wonderful work that Wendy's done, we will take the bulk of this as read. But Wendy, if you want to speak to the plans, and then we can go to questions or comments.
So thank you through the chair. I'm hoping the covering report is a satisfactory summary of where we are at. So we're nipping the $600 million mark for assets in this council. In fact, we will tip into that mark fairly soon. So having a good asset management system and a good asset management approach is absolutely critical for this council. I am not in this report suggesting that we have got it 100% perfect. There is still a long way to go in our asset management journey. I do think, though, we have made quite a significant leap and bound in this set of plans, in that they have been so closely developed with the long-term financial plan. And I think for the first time we're really starting to see the renewals are the renewals. They are asset condition driven. We've got probably some of the best data we've ever had in terms of asset condition to actually develop those, and we know where our gaps are so that we can target the next round of improvement. But for other capital investment, that understanding of what the 5, 10, 15, 20 and sort of out to even the 30-year horizon through the long-term financial planning has started to address what I think has been a big gap for us as council, and it allows us to have a much clearer strategy moving forward. I do need to acknowledge that there was a fairly major error picked up in the operations and maintenance costing between the draft plans and the final plans. All I can say is that I'm glad I picked it up. And, thanks to Erin for helping me go through all the fine-tooth comb and basically remodel it out from there. I think the saving grace in that scenario was that the base position for O&M was what was in the LTFP anyway. Mm-hmm. It was actually just aligning those base figures back into the AMPs. So that was a thankful position to be in. Otherwise, it could have been a very different conversation today. The Strategic Asset Management Plan is really where I want to continue to evolve. I think that, like Councillor Shanks was saying before, is one of those documents that allows everyone to try and understand what the vision is and understand how these things all link together. It's a decent first go. I will say that in my mind, what I wanted it to be, I didn't quite hit it. But do you know what? It is still a first good start, and I'm looking forward to seeing where I go with that, even just in the next 12 months. So happy to take any questions.
Thank you. Questions, comments, Christine? Oh, we'll get Christine first.
Got a comment and a question. First comment is thank you very much for the excellent summary. I have suffered through reading a lot of these asset management plans because there wasn't a proper summary, so thank you for that. My only question is around, we're going to do asset valuations annually plus a 5-yearly unit rate review, and then we're going to do asset management plans 4-yearly. Just wondering about the pros and cons of whether those two major exercises should be synchronised, or are we comfortable that one's on 5 years and one's on 4 years?
So essentially what we're actually doing is a rolling. So I think what used to happen in this council is that they used to actually go out and do all classes all at the same time, which is a big job. So what we actually have done is to sit there and say that we will actually do that rolling 5 years. So like we've done, we're doing open space this year. Yeah, so we've done our transport, we'll do our open space, then we'll do stormwater, and it was just this rotating around. So while the valuations or the condition assessments are every 5, I think the difference in the approach as well is that while we'll do a major review of our asset management plans, I think once we actually get that condition assessment, we'll do a review of the asset management plan, and to make sure that whatever we need to adjust as a result of that condition assessment. So it's sort of, it will work, yeah. And I think as we get more mature in our asset management planning and our systems and that modelling on our unit price and what that impacts going forward as well. I think as Wendy said, we've probably changed in our approach in saying asset management plans are here to help us. Yes, we do have a legislative requirement to do them, but if we're going to do them, we need them to actually help us in our development of our budgets, our understanding of what's actually happening from a long-term financial plan, and also where our priorities are in relation to our asset management. So, and having that, I suppose that approach is the things that we actually need to do to actually address those financial sustainability issues that we're actually got. Because at least then while we only do a plan every 4 years, I think we will be reviewing the financial forecasts every year, and especially when we actually get that solid data to reaffirm those positions, because I think we've created that linkage now to the long-term financial plan, and the requirement is for us to review the long-term financial plan every year. So by virtue of that, we have to actually review our at least the financial forecast and the planning every year as well by virtue of that. So it's that discipline of having to do that, and that will basically focus on, the priority will be on whatever we've done the asset condition for that particular year.
Councillor Shanks.
I think there was a meeting, and correct me if I'm wrong, Natalie, but you said you'd liked asking the question of the CEO if they were in the room of what keeps you up at night. I think we know what keeps Wendy up at night. $600 million worth of assets. You know, there's no small feat there. I guess what I'm liking about this journey is trying to gauge exactly what that looks like instead of flying by the seat of our pants and being reactional, while also having to react in the nature of the business. You know, whether it's a piece of plant has just hit a bollard, or it's trees fallen on a veranda because we've had a very windy day, whilst also trying to figure out what documents you can have in play that gives you a standard operating procedure so it doesn't start and stop with one person in the management team. What I am liking, I guess, and just to pass on a bit of feedback is, one, yeah, absolutely, Christine, the summary page, but the acknowledgement in the asset management plans of your confidence levels. So you're turning around and you're actually telling us, you're going, hey, we have put a lot of work into this, and we've seen it. We know this isn't a fabrication. This is a big body of work that is based on the auditing of that $600 million, however that looks, split it over to categories and specialise them. And we've put that body of work together and we've said, you know what, we've got some high confidence in this because the data we've got is a bit more accurate, is it a bit more confident because of the way it's been presented and the way it's been audited. Where we see room for improvement is X, Y, Z. Now, in this industry, you actually can't teach that. So when you start seeing strategic management and the delivery of actually delivering on all these things, of course it's going to be the underpinning of your long-term financial plan and your strategic document, but that's not something you even need to tell because organically you already know that and you're providing us with the confidence that we're going to see that through. So again, credit where credit's due, because those asset management plans are going to be your key to that success. So best of luck with it, and I'm really enjoying watching it come through, even though I'm sure it is keeping you up at night. I understand why. But yeah, from where we were 12 months ago, even 18 months ago, so thank you for that.
Any other comments, questions, Peter?
Yeah, look, congratulations on what you've produced here. It's a great doorstop, if nothing else. But seriously, my question really is about whether you can give us a bit of a feel for what the systems are that and processes are like in supporting this. You know, because a lot of information's being got in here. Somehow you've got to keep, it's going to change rapidly, and you know, we want to have an efficient way of managing that system, and as it's been pointed out, $600 million, local government is extremely asset-centric of all organisations, and we kind of lose that focus a bit. And so it's important, you know, we spend a lot of money on financial systems and on records management and all these sort of things, but, you know, $600 million worth of assets which have to be acted on, job issued, work orders issued, all the sort of stuff to maintain these things is no small part of an organisation like this, and I was just wondering if you could paint a picture of how you see that side of things that's beneath what we see here, I guess.
So through the chair, thank you, Peter. It's a very good question. And look, I think you've got commentary through multiple different reviews over the last couple of years that suggest that our asset management systems are not probably the best tools. It is quite clunky. We are trying to integrate systems that don't necessarily integrate that well, and the sort of the beauty, but the complexity of asset management is that you are trying to blend engineering and infrastructure and finance, and they're not naturally necessarily coming together. And I know, you know, the accountants are like, you're talking like an engineering accountant there. So, you know, we actually talk different languages, but the asset management system is what brings it all together, and it's critical for both sides. So there is a gap there. There's probably resourcing gap. There's probably actually a resourcing gap as well. I mean, at the end of the day, I really want to see all my maintenance driven through the asset management system as well. I would say at the moment we're still way too reactive. You know, as we go through the journey, we should be translating that into a very proactive asset maintenance system, so that, you know, we're not getting the surprises. You know, we're in the position right now where I am caught in legacy and lack of renewable investment in some asset classes in particular. So, you know, unplanned maintenance is kind of killing me right now. What Sharon and I have been discussing is that we're going to come up with basically a bit of a business case for asset management systems, and we will come back. There are a myriad of them, all with pros and cons, almost all with more cost than what we're paying now. But it is something that we do need to carefully consider and invest in. So once we get through that process, and now that I have a manager of infrastructure back on my books as of last Monday, that's one of our key tasks, is to get into that. So yeah, we'll come back with some options and seek advice of Audit and Risk Committee.
And just to add that, and I think that that's the critical thing about getting someone from that blend of that, you know, that utopia of someone, an engineer that's actually got a finance background. And I know that there are people out there. It's just trying to source them. From that perspective, I think that that's probably that big gap as an organisation, having that, being able to do that translation and understand. And so that's probably the biggest gap that we actually need to fill. And someone that, I suppose that journey on understanding the implications from a unit cost perspective, and that unit and that revaluation and the flow on impact that it actually has to the financials, and how we actually manage that. That integration as well. So I think that's a big learning curve for us as an organisation that we really need to address, not just necessarily the finance or the system that we actually utilise. We actually need to have someone that actually understands what that means on the ground from an engineering perspective, but also a finance perspective as well. So. Which is the challenge that we've got at this point in time as well.
Yep. Any other questions or comments? No, well done, Wendy. It was very comprehensive. I think, as Sharon said before, no, hang on, I can't remember who said it. It's been a long week. A lot of people, you know, a lot of councils do the asset management plans because you've got to tick the box, but you haven't, you know, you've actually thought about it and reinvented it, and basically taken it, you know, the maturity of the asset management plans from, you know, about a 2 to an 8, which is incredible. You know, I know you're saying, oh, they're not quite where I want them to be, but I mean, you've completed, you know, there's 4 plus the strategic asset management plan. You've finished them, because so many people have tried and just these things have been sitting unfinished for so long. So you've ploughed your way through and you've got them done, and I think. I bet there was. And also just from I really like the strategic asset management plan. I reckon that's a great document. I've never seen anything like that before, and it just shows how well you understand it all, because you can summarise it. A lot of people go, oh, here's my document, but they can't do the elevator pitch on it, and you can actually do that, so we know that you can do it. You know, and your information sessions to council. I mean, I've never seen anyone light up so much talking through an asset management plan. It was incredible. It was so good. So yeah, you won't be able to walk out of here. But so thank you there was a lot of work. So we really appreciate it. And I think if you have a look at what your I was trying to find the table, the annual spend on assets. I think if you do a business case for an asset management system, we have to support it because, you know, that's a huge spend for council. If you're looking at trying to save money, well, why not have a system in place that can help you reduce your largest spend across council? So, yeah, I think it's very important to do that. Councillor Shanks.
Yeah, thank you. And just to your point, absolutely. And that's why that business case, I think, is going to be really pivotal. You know, putting my elected member hat on here, when I'm reading in a report, I'm going to be focusing on what that investment actually brings into the organisation. Obviously, savings is one, but that savings is picked up through efficiencies and the like. And also the complexity of the program too. So not only is this the bee's knees of program, but we also have the ability to be able to use it because we're doing this, and by doing this, it cuts costs here because we do short-term investment for long, you know, and I'm sure that's what the business case will look like. But, you know, organisations and not just local government do trap themselves sometimes where it's like, oh, this is the whiz-bang software, we'll get it, and then you only use a portion of the suite. So, yeah, it'd be interesting to see that all come out, which I'm sure all will.
Excellent. All right, well, if there's no more comments and questions, we've got the officer's recommendation up there. Do I have a mover? Mayor Redman, a seconder? Peter? All in favour? Carry unanimously. Thank you. Okay, now we can go to 6.3, which is down at page 372. I feel like we're getting somewhere. Okay. We're halfway there. So item 6.3 is the draft long-term financial plan. And so the officer's recommendation is that the Audit and Risk Committee recommends to Council that it adopts the draft 25-26 to 34-35 long-term financial plan per the attachment. So does someone want to speak to this, knowing that we've seen various reiterations along the way, and this is the one to go to Council?
Through the chair. So essentially there hasn't been any change to the long-term financial plan that was presented to the council prior to public consultation, and then that was actually also provided to the independent members for them to provide some comment back to the council before they released it. I think that, again, it's I would sit there and say that the focus of the long-term financial plan is, and the emphasis of the long-term financial plan now is actually the strategy that we actually need to endorse and adopt and embrace. And a lot of that is that expenditure control and those efficiencies and that integration with the asset management plans. I think, you know, Wendy and I have worked really closely together over this last probably 12 months in making sure that there is that consistency and that the messaging and the importance of obviously that asset management and narrowing that renewal gap and having that focus on doing the things from an asset management perspective that will actually reduce our costs from an operational perspective. So addressing that, so we're not having continual maintenance on assets which we should actually be investing in from a renewal perspective. And again, ultimately, I suppose what I would like out of, I suppose, this long-term financial plan, and I know it's not going to happen probably within the next 5 years, is realistically get the council back into a position where it actually does, it reduces that dependency on the overdraft facility. And you know, and as an organisation that has $600 million worth of assets and a $50 million operating spends, we have to have debt. You know, that's effective utilisation from that perspective, but we just need to make sure that we've actually got the right debt, and that right debt is being back into a position where we can actually have that traditional principal and interest debt, and because we can actually service that. We will still always use the CAD facilities through construction from that perspective. So ultimately, that's what I would like to see for the council, and hopefully this plan is the first step to actually move towards that. Yes, there is a period of time where, again, I suppose just like Wendy, there is a bit of legacy stuff that we actually have to work through, and that's hopefully by the end of year 3 or year 4 of this plan, we will actually be in that position to sit there and say that we've actually dealt with all the legacy stuff. We're in a position that we're generating cash from our operations so we can actually start paying down debt. And then we get into a position where we can actually convert a lot of that debt to a traditional, because we've actually got the financial capacity from a cash reserves perspective. And in the feedback sessions, obviously we didn't have a lot of feedback from the community, so I'll take that the plan's right, and that they're all happy with it. You know, silence is acceptance in my motto, from that perspective. But we did have one gentleman that came in, and he probably was here for about an hour, and having that discussion about, you know, realistically it's the commitment of the council and the chamber and all that sort of stuff that really needs to make sure that this happens. And yes, there will be a period of probably 2 years where there is that tight control and budget control and making sure that we actually deliver on our budgets, because that's pretty much what the community is looking for, and that's what we actually need to do to actually get to that position. So, but there are a lot of other councils that are worse off that have, you know, high level debts and all that sort of stuff, and we're still managing to keep it under that you know, around that 100% type stuff, considering where we're at from a financial perspective. So I'll take any questions.
No, any questions or comments? Oh, okay, Mayor Edmund.
I'd like to move the officer's recommendation, and I'd like to congratulate the long-term financial plan. I know it's a collective effort, and thank you to all concerned.
Thank you. Peter, did you want to?
Sorry, my question is just around where we are in the process of this plan has been seen by elected members through presentations and so on. So we're now getting to the stage where we're endorsing this, and then council endorses it as well. Okay, yep. And has there been any concern expressed amongst council about the level of rate increases that this requires? Has that been an issue at all, or they see the reality of it?
To me, there hasn't been. I'm sure that there's probably individually some council members have concern, but collectively there seems to have been a bit of an acceptance of those rate increases that have been set out. And it's interesting, even the community member that came and said, do they think that, you know, whether we should have actually gone higher in the rate increase as well. So, but, you know, it's always that balancing act of what we actually need to do, and it is that always that two-pronged approach. I think just putting rates up doesn't necessarily fundamentally address some of the issues of that, making sure that we're providing that value proposition to the community with regard to what we're actually delivering and the cost it's actually costing us to deliver.
Yep. Councillor Shanks. Oh.
Well, I've commented. I just think the reaching that point of balancing the budget in next year's, almost next year's rate period is commendable, and you know, that's the first post you've got to get to, and then you can help yourself along the way after that. But at least that becomes an achievement, I think, from where we've been. So
Shanks?
I guess to answer your question, Peter, I can only answer it as one elected member in the room, but what I am sort of noticing and where I've been able to transition a little bit throughout my journey is always been based on being able to provide the reason you're spending money and improving the outcome and the worthy of the spend. So where I think there might have been a little bit of back and forth in the past was, well, let's just keep raising rates for rates' sake, and we'll say that this is what we want to be able to deliver, but realistically we're trying to put band-aids on the bucket, ever-leaking bucket. And I think it's a mentality change, and we are starting to see that, and it does start with good data coming through. It does, and again, it's all journey. Like, we are still on that journey. I'd love personally to be able to see our long-term financial plan not only talk about our performance in ratio speak and the like, but actual language that our ratepayers understand as well. Hey, we know the last 3 years we haven't delivered those sexy projects, but here we are in year 4, as our long-term financial plan said that we would. And I'm not talking about the $40 million developments and whatever else. I'm talking about in year 4, we said we would catch up on, even if it's road seal or it's a footpath, and we have achieved that. It's those sorts of communication pieces in the long-term financial plan that I think we will evolve into. But if we start nitpicking now without the ability to be able to budget by budget, learn and evolve along that journey, I think we'll probably be doing it a misjustice. And I think in the long-term financial plan, I think even Sharon would admit, in those 7 to 10 years, we start getting a little bit wishy-washy, in lack of a better term. But again, how that long-term financial plan adapts as each budget feeds into it, I think it's up to us as not only the audit and risk, but the elected body to ensure that it is maturing with the new data that we plug into it, rather than the back engineering of the long-term financial plan to suit the budget of the reactive spending we need to do.
All right, and I just wanted to say, because I was at the second information session with council, that the council was very supportive of it, or the majority of council was very supportive of it, which was good to see. And I think they actually, there was a lot of understanding of it. I know it's all numbers and that, but I felt that, the key messages were heard and understood. So I got the positive vibe from it, which was nice. So I'm happy to second the motion. Everyone in agreement? Carried unanimously. Can't speak. Okay. So we'll move on to 6.4, which is the first budget update as at the 30th September. So the officer's recommendation is that we note the FY25 first budget update report, which is forecasting, we've got the operating deficit of 1.694 million, which is in line with the adopted budget, capital work expenditure budget of 19.58 million, which is an increase of 4.23 million, and a capital income budget of 6.1 million, which is an increase of 4.7 million. And the recommendation to council to pursuant to regulation 9.1.2 of local government regulations, the budgeted uniform presentation of finances as contained within attachment 1 be adopted. So, Erin, did you want to, Sharon or Erin, who would like to talk to this one? She's going to.
Okay, so our main focus always of the first budget update is to have a look at capital rollovers, so any unfinished projects from the previous year. We did make a few adjustments in the operating result just between income and expenditure. So we have been notified that we will receive additional financial assistance grants this year, so we've just made an adjustment for that. And then we've just used, although it's not technically a saving, we have taken that off the savings target for this year. So the result for the operating result will stay the same at 1.690 million. In terms of the capital rollovers, I think, I'm just going to go down, so I'm giving you the right number. We did roll over $270,000 worth of operating projects as well, which again, the net result was that we actually got more of the financial assistance grant, so we were able to use those savings as well. So carry forwards is 1.6, so that's the unfinished projects from 2023-24. And then we just had some grant-funded projects as well. So the big ones were the netball courts, which I think was $3 million. And then we just had a little bit left over from Carbeath and the modular change rooms and a few other different projects as well. So they're fully grant funded, so we've just rolled over the grant funding with that as well, so there's no effect on that. There was a couple of various adjustments that we had to make as well, just minor, and also we just had a look at the 2024-25 capital works program, and because of the rollovers that we had, we just tried to take a realistic approach to projects that we wouldn't get done, developer contributions that we wouldn't have to pay, and we just had to try and be realistic about reducing that capital spend as well. So I think it was 1.139 million for that one as well. So the net result is we actually were able to, we have increased the capital spend, but we've also increased the revenue as well because we've rolled over that grant funding. So the capital works program will go up to 19.7 million, and then we've rolled over 4.6 of capital income as well.
Yep. Thank you. Are there any questions or comments? No? Yeah, Councillor Shanks.
Yeah, just quickly, I mean, the project rollover is always an interesting thing. I am liking how we are doing it in more recent time, to be fair, but I guess a good indicator as well is probably through you, Chair, to Wendy. You know, some of these PC dates that we were hoping to maybe reach in the last financial year, or was it more we weren't really ever planning on reaching the PC because you know what I mean. By the time you go out for procurement, by the time, and I guess are we getting a little bit more savvy, in lack of a better term, of saying this is a 2-year project, so therefore we're going to budget half now and half in there to accurately catch it. Loaded question, I'm sorry, but yeah, PC dates moving, how does that look?
Through the chair, another good question. I think overall, I'd be lying if I said I wasn't slightly disappointed at the additional carry forward and capital. It's more than I had expected, and it's like the creep of 20 little things into $1.3 million, which because we had already identified at Q3 budget review a big chunk to roll over as identified multi-year projects. The trend is definitely, for me, in design work taking longer, and then the design work taking longer means the actual cost estimates are taking longer, and then what we're finding is cost escalation has happened in the meantime, so then the actual budget we had for D&C is no longer enough, which means then we're saying, okay, hang on, we'll hold, we'll roll it over into next year with next year's budget so we can actually do it. So I think there is an element of needing to get better at that. Look, I mean, I guess I'm grateful that a big chunk of of some of those carry forwards and the grant and the revenue that's coming forward, they're all coming to a conclusion right now. So some of those big meaty projects like the netball court redevelopment, the change rooms, Red Reserve's been done. So we've made this huge headway through projects that we never anticipated doing in the first place. And the reality is we take on these big grant funding projects and we actually don't bring on any more staff. And if I reflect in the design space, one of our main, the lead of our engineering design program has been very much pulled off to the side to do with Pioneer Park Wall as well, which is this big, complicated project. And so, you know, he's kind of juggling probably one big heavy ball and lots of little balls in the air, which again sort of end up with that disappointing amount. I think the trick here, and this is going to come back in as we start to go back into budget bid cycles for next financial year, and we almost immediately go back into reviewing the LTFP and the asset management plans, is the new things are what we need to make sure we can deliver within resourcing capacity, or are we going to fund more resourcing? Because we are definitely, because despite this result, I've got a team who are pretty burnt out at the moment, and so, you know, there's something not working there. So we need to be very realistic. I think, you know, if I wanted to find the good news story in it, it is that the renewals are typically tracking really well to completion. It is the new and upgrade that we tend to fall down on, and renewals are my focus, and my team know it's the focus, so that's good. You know, overall, we still did, and like, you know, I feel like this is maybe putting, is it the expression putting lipstick on a pig? But like, we still did 84%. Yeah, like we still did. We still completed 84% of the capital works last financial year, which actually is one of the best completion results we've had in years. So, you know, it's an upward trajectory, but that still isn't good enough. So, I don't know, I guess it's let's see what we can do this year. Is that helpful, Nathan?
And again, like to put in the caveat of I wasn't having a crack, because that 84% actually, you know, I remember not losing my mind, but I remember going back and forth with your predecessor and everyone's predecessor about, you know, only delivering 55%, 60%, and that was a year where we're going out to our ratepayers and we're jacking up rates, and then we're performing like this, and the defence or the feedback that we're getting is like, no, this isn't going to solve the problem. You know, this isn't an argument of if you're going to deliver or if you're not going to deliver, because you already haven't delivered. But what are we going to do to improve the process? And again, it is about the conversations, and it is about, I mean, realistically, we set ourselves up to failure when we turn around and we say we're going to deliver $19 million worth of work in a 12-month period starting July 1st to June 30, realistically, let alone chuck on the local government processes on top of all that. But the understanding of that new capital, I have seen, and I'm not telling you anything you wouldn't already know, because I completely agree with the new capital stuff. You know, that's that special projects team that you start bringing on to be able to help deliver, and then is that then what we look at putting through those business cases, and then we start getting our Gantt charts really put in to say this is the duration of the project if it starts at this time, and it all links into your financial forecasting and cash flows. And when you don't start at that time, you easily move it. But if you don't have the resources, there is no easily moving anything, because you haven't had the special resources to be able to set up the processes. So again, that wasn't having a crack at carry forward. The appetite and the acknowledgement of carry forward is quite heartening once again. But yeah, it's always that strive to be better, and that 84%, I mean, pat on the back, because construction is even harder than it was when I was having these similar conversations back when.
Yeah. Peter? Good. Yep.
Yes, actually, I've just come off the back last night of another council that's also got similar problems in terms of the carry forwards. They feel like they've got too much carrying forward, and through the discussion, it was clear that what they need to do is change like you're talking about, changing the process for budgeting for these things, so that you in the first year it's maybe and design, and then the following year you do and then you have a more reliable budget to go into for that period, and it sort of clashes with the concept of budgeting in annual terms, because that's how we're collecting our revenue from rates and all the rest of it. But if you can do that and have the council, as they're going through the process, recognising that they're doing a 2 or 3 year capital works program, and that staff don't have to feel like if they don't go for the whole budget now, even though it might be rubbery, they won't have the money to finish off the job. So it's a timing thing, and I don't know how you do it here, but it seems to me that it would be a valuable process to actually educate the council as well in terms of how you do like a 3-year plan rather than and we do 10 years as well, but I mean it's really the near term that you need to focus on. So I just sort of make that comment, I guess, in terms of how you do things.
Just to elaborate on that, so over the last couple of years, especially with the bigger projects, we have actually been doing that scenario of presenting business cases for projects that we know that are actually going to go over more than 1 year. So we actually are budgeting in that sense. So like we might actually get the approval for the project to do the project this year, but knowing that it's actually going to be delivered over 2 or 3 years, depending on that timing. And we're quite upfront in that. Even in the annual business plan, we sit there and say, this is a 2-year project and this is the anticipated spend that we're actually going to be doing over that 2 or 3 year period of what we actually determine. And I think that while the increase in the capital works program seems big in the sense that it's 4 million, I think we still need to actually take away the fact that 3 million of that is actually the Gawler netball courts, where what we actually did when we got to the end of the financial year, we actually looked at the scope of the works and to sit there and say, because we had been treating that as an operating project for majority of the time since it came through. But when we actually, as going into the construction and looking at what the construction is, it is realistically, we noticed that majority of it is actually on our land and our assets, wherein I think when the initial thing, it's like it's just the netball courts and we don't own the netball courts and all that sort of stuff, so we'll run it through operating, where a lot of that work is actually our assets and we'll retain those things as well. So once you actually take that $3 million out, it's not that much of a extra increase from that perspective, and fortunately that project is a grant-funded project as well, so there's not a big impact on us from a financial perspective, because it's a fully funded project over the term.
I think what you need to do with the costing these projects, the capital projects, because as you know, you capitalise the salaries for any projects, to make sure that you have enough people, like enough of the budget allocated to that project includes enough people to deliver that project, because that cost is capitalised into the cost of the project or the asset. We still have to fund it, but it was something that in my day job we weren't doing. We didn't, people weren't. They were putting in budget bids, but they weren't putting enough people in the budget bids. So you've got to make sure you've got the people in there, because then you get caught short. And so you're saying we haven't got the money. Well, and it's hard because of the escalating cost of construction. But if you're, you're going to have to work out, where do you save on materials so you can allocate money to people to do the work? Like it's sort of that part that, of the whole overall cost of construction.
And I think it's also a bit of a mindset of probably this organisation as well, is to sit there and say that asset team is actually here just to deliver the asset program, and so they sort of off having a meeting. It's like your primary purpose is still there. So understanding that from a costing perspective and from a capitalisation perspective, it's just getting them around. That's a journey to get them through as well. So essentially we do that. It's just a question on do we have enough resources to deliver the number of projects, but hopefully with the emphasis on renewal, I suppose we will have a bit of regrouping of that, which then potentially reduces the impact on the maintenance team at the depot, which potentially we can use more from as additional resources from a construction perspective as well. So it's sort of like just getting that focus so we can redirect the existing workforce, especially from a civil perspective, into what work can we actually do in-house rather than actually relying on the, I suppose, the market to deliver those resources as well.
Yeah, and as we've heard many times tonight already, that this is not a unique problem to Gawler. Like, everyone's having the same issues with the cost of construction. Councillor Shanks.
So just as we're talking, I just started thinking about it. We're coming into, 2026 will be here before we know it, and we'll have another round of election promises starting to come across the desk. I get the vibe that some of these election promises, if some people in the room had it their way, they wouldn't come across the desk, because then we'd keep on being able to run the business the way we predict we can run it. That said, obviously, we would love to be able to jump at the right opportunities should they cross our desk. So to that end, I think the balancing process that we are working through, I think, is going to be really, really important. I think we do understand and acknowledge that the renew and the maintenance is a separate arm of the business, and the special projects, in lack of a better term, is that other arm of the project, the other arm of the business, and trying to quantify what FTE that actually is per week is going to be hard until we start understanding what we're consistently delivering in the special project space, but then defining that. It's again, an interesting one, but again, the point about 2026 rolls around, we could be having the same conversations in 2028 because we find ourselves in the same position because we've used these opportunities. I know Sharon's about to chime in and say, yeah, but we've got a long-term financial plan now, Nathan.
That's right. And that's where the discipline comes, in the sense of, we do have a long-term financial plan, and we have actually identified, I suppose, some of those wish list projects. So when the opportunity comes, we have to actually stick to those wish list projects, because what we're actually going to be doing is that we're just bringing something forward that's fully funded. It's when we try to think up something new that we haven't actually, that's not already in the pipeline, that we haven't already addressed, that we actually want to do. So that's the discipline of saying, actually, no, this is what we need to meet that, to meet your, this is the project that we want you to fund as an election promise, not this one over here, because we haven't done the planning, we're so far behind on that. And realistically, this is something that we've actually gone out to the community to sit there and say, this is the pipeline, and if we actually get an opportunity, we will bring it forward. And so it's that discipline from a council perspective that we actually need to have to sit there and say, okay, well, it's those projects that we bring forward, as opposed to thinking of new ones, of having that wish list out.
Yeah, absolutely, and I guess that's that, not only discipline on the project, but what we're talking about is that resource understanding as well. So if we do bring forward that amount of whatever that project might be, how much of that amount is actually going to allow us to resource the arm of the business that needs to be able to deliver on that project that we didn't forecast to be able to deliver it in 2027, that was actually sitting at 2030. So again, it is that overall arching understanding of the resourcing, not only getting the funds to actually deliver it, but deliver it without depleting our current resources, so we start falling behind on our renew again. Because that's that repeat history, right?
It's taking into account when we ask for money, or say this is how much it's going to cost, we actually do sit there and say, actually, we need an extra $150,000 just for project management and delivery of that. I suppose, yes. So that's...
Cool. All right. Do I have a mover for item 6.4? Christine, seconder. I'll take Peter. All in favour? Carried unanimously. Thank you. Good discussion. All right. Item 6.5 is the Treasury Management Performance Review, and we've just been asked to endorse this report. Erin, did you want to speak to this one?
Did Sharon actually want to just touch on the conversation we had yesterday? I'll start just in terms of how we were ticking along last year. So we were heavily reliant on the CAD. We've had many conversations about how we've been using the CAD to basically fund our operations as well, which is not ideal. We did speak to the LGFA yesterday about our $15 million increase to the CAD facility, so I might just get Sharon to elaborate on that. I don't want to speak out of turn.
So obviously, as alluded to, that we are getting fairly close to our current debt limit of $25 million. So we have opened conversations with the LGFA regarding increasing the facility. They are open to that. Obviously, we've provided them the long-term financial plan, and they're comfortable with how the long-term financial plan sits. There will be, in relation to, and we did have discussions on whether they provide a long-term facility as a short-term facility or a medium-term facility. I think we sort of probably landed on a bit of a mid-range facility, probably around about 5 years in that sense. And that's probably driven from my perspective. I think as an organisation, we need to really have that commitment and that driver to look at the financial position and move towards, I suppose, creating those cash reserves and paying down those facilities and getting into that traditional borrowing area. There will be, as they mentioned previously, there will be obviously covenants around that, and that's obviously meeting that break-even position as per the long-term financial plan from that perspective, and then the regular reporting on how we're actually going and that achievement of that. So we will start that process going forward. Pretty much probably have a drawdown or the facility available to us to access from December, because while we probably will be okay up to December, it's that delivery of the capital works program, because that's what it's actually for predominantly. It is for that delivery of the capital works program, and I suppose that's another impact of whether we can actually deliver and not have a lot of carry forwards is our ability to actually fund that program as well. So positive conversations. Yes, there will be some restrictions on that, and there will be asking from a commitment to deliver that break-even position by the 28, I think it was 27, 28 in the long-term financial plan. So, and then there will be regular reporting during that time period as well, making sure that we are actually doing what we said, that committing to our long-term financial plan and committing to the journey of getting back to that break-even position.
All right, are there any questions or comments on the Treasury? Councillor Shanks.
Just on process, I guess. So the LGFA, we're now entering into negotiations as we endorsed in August. When do we see the follow-up report of the negotiations with the recommendation should a deal be struck?
Well, we don't actually technically have to come back to council because you've actually endorsed that we actually increase the facility. Through the audit committee, we've done a commitment to do quarterly updates of the Treasury Management Report. So once that facility is endorsed or in place, it will come back through the audit committee, but there's no, because the committee, because the council has endorsed to allow the increase to the 15 million of the facility, there doesn't need to be a report to come back to council to endorse that facility, but we will report at the timing of it through the audit committee and through this report that we committed to providing on a quarterly basis going forward.
So are we able to, I guess, my thing is, what are the negotiations and the caveats we agree to and we give delegated authority to? I don't disagree with that process, but are we going to maybe see a noting report to say, hey, guess what, we got our 15 million facility. Look, here are the things we just have to follow over the next, and here's how the facility sits. I think that would be a given some of the dialogue around the item.
I'm more than happy to do that, but we wouldn't be going to get a $15 million facility straight away as well, because the $15 million facility was more for the forecast and the long-term financial plan. So realistically, based on this budget, it will actually be a staged, and I think that from a cash flow perspective, like we probably need to, by 30th of June, we'll probably need to increase it to around about 30 or just over $30 million to actually make sure that we've got the financial capacity to deliver the program, and then obviously have a bit of a buffer for peaks and troughs, because we still have that quarterly peak of most of our revenue comes in a quarterly basis, but our expenses happened regularly. So what tends to happen is we get flush with cash at the start of it, so our facility gets drawn down or reduces, but then by the end of the quarter it's actually getting close to that limit, so it's just managing that process. But realistically, the facility that we'll probably be seeking will probably be around about between $5 and $7 million. It wouldn't be the full 15, because we'll manage that going forward once we actually get through, I suppose, understanding what's happening from a next budget perspective as well, and then what are the iterations from the long-term financial plan as well. So it's just having that flexibility to go back and if we actually need to do it, rather than keep on coming back on a piecemeal basis, knowing that the long-term financial plan has this limit of around about $40 million that we think at this point in time, based on this information, that's what the peak's going to be.
I think the other good thing about it is that, you know, you'll be held accountable for achieving the objectives of your long-term financial plan. Yeah. So it's, I mean, this is what we've said we're going to do, and we're going to do it because the bank's going to hold us to it. Or the OG say. Any other questions or comments? No. Do I have a mover for item 6.5? Christine, a seconder. I'll second it. All in favour? Carried unanimously. I did. Can I? I can I? Yep. I'm trying to help. Okay, item 6.6 is the risk management update. Nathan, do you want to talk about that?
Through the chair, thank you. So the mutual liability scheme have changed the way they undertake their risk profiling programs. So this year they did a risk review, just purely on basically risk management and the way that we do it. It was a surface review, so it wasn't a deep dive into actual registers and that. They were just looking, do we have policies, procedures, training has occurred to elected members, that sort of thing. It was good.
Yep.
Yeah, I'll take on any questions.
Cool. Any questions or comments? Yes, Christine?
Just one question on page 469. Can't read it right now, but anyway, there was reference about a training needs analysis for ARC members, Audit and Risk Committee members. Just wondering, do we need to do anything? What's the action on that?
So that question was just around, just having a quick look, that roles and responsibilities are identified in the risk management framework, and that elected members had also undertaken training on what the risk management framework looks like.
Yep. So that was, yeah.
Yep.
Yep. Cool. All right. Any other questions or comments on the risk? I think it's just a good indicator of what we've been doing. So it'd be nice just to tick through it, which is good. So well done, Nathan. All right. Do I have? So the officer's recommendation is that we recommend council adopts the risk management policies provided in attachment 2. Do I have a mover? Peter, seconder. Christine, all in favour? Carried unanimously. All right, now we're back to the information reports. We've done 7.1. 7.2 is the financial performance summary for FY24. The officer's recommendations that we receive and note the FY24 financial performance summary report. Did anyone want to speak to this one?
Obviously, the biggest variance is in relation to the financial assistance grants. So while the federal government did make advance payments, they actually paid them to the state. The process is that they get paid to the states and the states distribute to councils. So they made their advance payment on the 28th of June. Unfortunately, the 30th of June was a Sunday. So that funds wasn't actually paid to council until the 1st or 2nd of July. So it's a pure timing difference, but it's a frustrating timing difference from that perspective. And again, in relation to from a revenue perspective, as we went through the end of year process and looking at the funding, the grant funding for the Gawler and District Netball Courts, we've transferred that to capital. So that's just basically we transferred the income, but we also transferred the expense. So that was actually a net zero sum transaction. And the other one is in relation to the roads to recovery. This was probably a bit of me being new to the organisation and not realising that the council took advantage of carrying forward 1 year's or bringing forward 1 year's of the allocation for the roads to recovery. So over the 5-year program, we received our full funding allocation. It was just that we actually received a double amount early on. So in relation to that were the main, and obviously depreciation is one. I think that we've probably got a better handle on it now in relation to understanding, and I think this is one of those things about increasing the knowledge from an engineering perspective and an accounting perspective, and understanding what the implications are from that perspective. So yes, while we've got a unfavourable variance because it actually came out a bit higher than we anticipated, there was a combination of factors there that I still think back probably in the 22-23 financial year, the asset revaluation was probably overcooked. However, the auditors in their review of 22-23 and even 23-24 wouldn't actually take into account any adjustments to that revaluation, which has that depreciation impact. But again, I'm sort of got more confidence that we actually understand what the depreciation impact and understanding, again, always the unknown is always going to be as a growth area. We never know how many assets that we're actually going to get from a developer perspective until realistically at the end of the year, and by that time we've already done the budgeting based on an anticipated level of assets. So that's always going to be an unknown that we unless we get really good relationships and understanding of what the pipeline is from developers, I think it's just always going to be a bit of a grey area. And some of the things in relation to, I think, going forward, as an organisation, we need to, and this probably goes back to understanding and how we're actually going to drive those efficiencies and understanding those distinctions between what's our recurrent budget versus what's our initiatives budget, and really separating those reportings on that, so you could actually understand where from a recurrent budget, because that's really what our focus should be, is are we actually delivering on our recurrent budget, and are we actually doing that, which I think is sort of in the past probably gets a bit hidden by initiatives not necessarily being delivered on time and all that sort of stuff. So as we go through, we'll start separating that difference between the recurrent budget and those projects as well, because I suppose those projects, those initiatives are the ones that we actually do increase rates to specially fund. And they're the ones that we really need to be transparent on. Are we actually delivering on those projects? And if we're not delivering on those projects, why aren't we delivering on them? Obviously the big ticket item in that scenario was the integrated transport and growth strategy, which was a very complex project, and we're probably a bit ambitious in thinking that we could actually do a growth framework and an integrated transport strategy and get that all done in 1 year. We did a crack, and then we've actually got the GARP overlay on that, which I suppose we needed to take into account. So we needed to take those foot off the pedal in relation to making sure that what the outcome that we get is good for the community. So, and again, some of those initiatives that we had favourable variances, we're probably at the mercy of state government and federal government, waiting for them to actually make their decision as to what they want with some of the, especially with the aged care models and the disability and all that sort of stuff, where some of that we're just at that mercy of that. So take any questions.
Are there any questions or comments? Yes, Councillor Shanks.
Just quickly. I mean, I'll be honest. I got a little lost in the numbers. Not my expertise, but I guess just to pick up on some of the points that Sharon was making, that division of what we're going out with and communication style of what we're talking about with our community, I think is going to be key. Capital projects, new spends, and obviously dipping into our borrowings doesn't mean we need to increase our revenue to the equivalent of what that project's going to cost, and that does get lost in translation, to be fair, because obviously increasing our borrowings and us slowly paying it back over the forecast time is a lot more manageable than, hey, average day rate payer, I need $15 million from you for a project you probably don't want, because that's the way that some ratepayers operate. But again, that clear-eyed communication piece on footpaths, roads, those fundamental services are what your everyday rates go to, I think is the message that we really need to drill home, because those $15 million projects are going to be liked by half the community and not liked by the others. It depends on who uses what, So, I'm looking forward to working, hopefully, with the administration to try to really spearhead that communication piece, because we are trying to apply subtitles to a very, very complex language.
Yep. Cool, thank you. So do I have a mover for item 7.2? Mayor Redmond, seconder Christine, all in favour, carried unanimously. So item 7.3 is the management of outstanding rates. Renee, did you want to talk to this one quickly? Oops, it's me.
So the purpose of this information report is just to provide an update on the management of outstanding rates, which was last reported to Council in April 22, with a recommendation around possibly commencing Section 184 proceedings to sell properties. Obviously, those type of proceedings are absolute last resort. We've had a lot of change in the department in leadership and also in our priorities, and also updates with our debtor management policy and rates financial hardship policy, which are aimed at helping ratepayers who are in these situations. So if you're happy to take the report as read, or any comments and questions?
Does anyone have any questions, comments? No? No? Peter, did you want to say something?
Just quickly, we've got one ratepayer there who's 10 years in arrears, is that right? $23,000 worth. Is that correct?
Yep.
Yep. Got away with that.
It's a residential property, I guess. Ultimately, these are not unsecured debts. We are able to reclaim this money if the property is sold. So and given the current housing crisis in South Australia, and given that we're in a more of a lower socio-economic area, it's very unusual for councils to proceed for the sale of these types of properties. I guess of the 60, I think it was 63 that were reporting, the majority of, all but 3 are residential properties. So if we were wanting to proceed with these kind of sales for non-payments, I think you'd be targeting those vacant land, commercial properties rather than residential as a first port of call.
No, I agree with that. As long as it's a property that, secures the debt, then you can always recover it eventually.
Yeah.
Okay, any other questions or comments? I've got a mover for item 7.3. Oh, Karen moved it. Sorry, I have mover. Seconder. Peter seconding it. All in favour? Carry unanimously. Okay. Item 7.4 is insurance coverage. Just to note the insurance renewal report. Are there any questions or comments on that report? Christine?
Just one. I was pleasantly surprised to see that ARC members have personal accident insurance. We're covered.
Very good. Cool. Any questions or comments on that report? No? Okay, do I have a mover? Christine moved. Seconder, Peter. All in favour? Carries unanimously. And 7.5 is the annual financial statements for the regional subsidiaries, which are provided to us for our information. Any questions or comments on that? No? Do I have a mover? Peter, seconder, Mayor Redmond, all in favour? Carried unanimously. Woo. Okay. So we've got item 8, items listed for discussion, which there are none. Item 9 is questions without notice, which there are none. Item 10 is motions without notice, where there's none. Okay, which moves on to item 11, which is confidential reports. So the final item is 11.1, the procurement of the external auditor. So can I ask someone to move that the meeting go into confidence? Mayor Redmond, seconder. Second, Councillor Shanks. All in favour? Carried unanimously. Okay, so For the purposes of all of you watching at home, as per the officer's recommendation, the following matter will be discussed in confidence. So we'll be suspending the live stream now and closing the meeting following the consideration of the confidential item.